Hello and welcome to the launch episode of Fintech with Fries. Welcome, Nick.
Thank you for having me.
It's a pleasure. We'll dive into some of the nitty gritty in automotive and motor financing. Before that, though, a quick introduction. My name is Leonard Berger. I work as a senior product marketing manager at Lenvi, and we'll be launching this series of kind of short lunch and learn, 30-minute lunch and learn sessions to talk everything about lending, fintech, and anything that's associated with these two topics. Today, for our launch episode, we've got a great guest, Nick Press, who is the Leasing and Finance Development Director at AutoTrader. Obviously, AutoTrader needs no introduction itself. It's very well known, and obviously they've got a wealth of data. Nick himself has been in the industry for quite a while. We met, was it 10 years ago or so? So
Yes.
it's been a while. But
Yeah.
yeah, no, definitely. So let's go straight in. So setting a bit of the stage. So we'll be talking about motor finance, and we'll diving into motor finance. But obviously, that's associated with all of the automotive trends. We all know about what happened in the past 5 years. I don't think that needs a separate kind of setting the stage. We all know about COVID, how that impacted kind of motor and the automotive sector and motor financing and everything else. Before we start, though, and this is obviously new to us as well, but before we start, we want to start with a question. Given the theme of this series, do you prefer chunky chips or French fries?
Great question. So for me, it's an easy one. Chunkier the better. Specifically, like I'd like it crispy on the outside, fluffy on the inside, and it has to be with ketchup. Like for me, you have to have chips, and yeah, French fries are okay. But if you go to McDonald's or KFC and you can have French fries, but preferably chunky chips with some ketchup is
With
my
some ketchup.
do.
There you
Yeah,
go. And fish and chips as well, right? And the chunky ones needs to, yeah,
exactly.
definitely.
Yeah, yeah, crispy.
Cool. Well, let's first let's cover kind of the automotive sector. Obviously, that's associated with all of the things that are happening in financing. And I think the topic on everyone's mind is obviously this looming deadline of EVs and EV sales and
Yeah.
everything that's going on.
Yes.
So how have EV sales and kind of adoption of EVs impacted kind of the motor, also the motor finance landscape, but in general the kind of the landscape, and how do you see this going into 2025 and beyond? And do you
Yeah.
think lenders have been adopting quickly enough to kind of focus specifically on financing these needs for EV buyers?
Yeah, so big topic. Electric vehicles obviously is huge at the moment. We've got the government zero emission vehicle mandate, which is kind of trying to set out the percentages that each manufacturer needs to get to in order to get to net zero and 100% electric vehicles. New cars, if you look at just the new car market in general for a second, new cars is tough for manufacturers. Go back to, you say COVID, go back to 2019, we were selling in the UK 2.3, 2.4 million cars a year. So that's the size of the new cars coming into the UK. COVID obviously happened. We sold 1.6 million cars. We had the chip shortages, 1.6 million. That kind of 3 or 4 year period, it was significantly constrained. Last year we did 1.9 million. This year we might do about 1.92 million cars. So still a big chunk less than kind of 2019. So if you think about the overall size of the new car market, it's constrained and quite an interesting one. So again, that size of the pie in essence is getting smaller. If you think back to 2019, there were 47 different manufacturers selling cars in the UK with 385 different models. This year, there's going to be 65 brands. So move from 47 to 65. There'll be 425 different models. So there's so much more choice in the market now for consumers, but actually a smaller pie because the total numbers is decreasing. So overall, it's challenging for those manufacturers. They're having to work harder. They're having to do more to capture that smaller pie. And then you've got on top of that, the kind of shift to electric. So we've got the target this year of 28% of all electric cars should be, all car registration should be electric. In February, it was 25%. So a quarter of all the cars registered in February were electric. 28% feels like it's going to be a challenge. But we'll kind of see what happens. I suppose, just a couple of your points. So it's a challenge for manufacturers. What are the finance companies doing and what are the pressures they're facing? The biggest thing has been trying to just shore up the used car values because there's there's a percentage increase from a petrol or diesel brand new vehicle to an electric vehicle, and it's come down. It was sort of 50-60% 3-4 years ago. The price difference, we're about 25% now as an increase for an electric vehicle over a petrol vehicle. But it's trying to justify that into the cost. So lenders, particularly funders, it's about monthly payments. How do they make that electric vehicle look attractive alongside a petrol vehicle? And how do they protect themselves from the depreciation? Because we've all kind of seen and heard in the press that the value of used electric vehicles has dropped significantly over the past couple of years, and it has, like for like vehicles, some of them down 40% over those 2 years. So the challenge is, how do they protect themselves, set a realistic value for what that car will be worth in 3-4 years time, but at the same time make it attractive to sell enough of them and promote them? And that's a challenge that all of the industry is facing. The single, so if you say what's happening with finance and what parts of finance are doing well, the thing that's kind of come out over the last few years to really help push this is salary sacrifice. So using the government tax advantages that you getting people into brand new electric vehicles where they have a lower tax liability has made it work, and we've seen a significant increase in salary sacrifice. But generally, if you look at traditional HP, PCP through the retail market for new electric cars, it's really struggling. It's maybe 1 in 5 of all new cars are sold in that channel. So it's a challenge for both the OEMs that make them and the lenders that finance them. Absolutely.
Definitely. It's interesting to touch. We'll touch on kind of used cars. Obviously, that those are always naturally higher. I think it was 7 million last year compared to the 1.9. But I guess you already touched on it slightly. But the innovative kind of financing models, salary sacrifice, obviously in the UK being a tax efficient way to kind of get a new EV. But even so, like having looked at that, often that's still quite a large chunk of your salary that you then do end up giving up. And with everything that's going on in the consumers. And I think one of the things is the value that drops is that is down to battery life and all of these things, right? The concerns around that and consumers potentially not wanting to pay a lot for an electric vehicle, potentially given it.
It's kind of an awareness piece. Obviously, it's a new technology, and if you go back a few years, everybody has a mobile phone. Everyone knows their battery on their mobile phone is useless after 2 or 3 years.
Exactly.
And there's that assumption that it's going to be the same with a car. A car's like a big mobile phone. It's got a big battery. You plug it in 3 years, the battery is going to be useless. And there was that perception amongst the kind of a big chunk of society that always thought, actually, it doesn't work. It's a technology that's not going to work. The batteries are going to have an issue. It's been proven that's not true. The way cars are charged, you'll never be able to charge a car battery to 100%. They cap it at like 85%. You can't fully drain it. So there's loads of bits in there to protect it. And we've got more data now that can kind of prove the longevity of electric vehicles. Yeah. But it was more like on new, as I said, there was that 50-60% increase over a petrol car. And it was getting getting general consumers to think, I'm willing to pay a premium for this sustainable vehicle. And I think that was the challenge to start with, particularly then with used cars. And again, we'll touch on it. It's changed slightly with the price decreases, but on new, it still is like there's a premium in some cases to move from a petrol to an electric. And how do you justify that? And it's, for me, my opinion, it's an education piece. Like I drive 2 electric vehicles now. I've shifted from petrol to electric, and I wouldn't go back. And I had the same concerns as everybody else. I was like, actually, is range going to be an issue? Like I've got a Nissan Leaf that does 120 miles. It's useless, but it's perfect for what I do. And it's understanding what's right for you and what can you use, because an electric vehicle isn't right for everybody. There's going to be people that are doing hundreds and hundreds of miles every single day. They don't have off-street parking. They don't have access to charge it. Maybe it's not right for you at the moment. Give it another cycle, 3 or 4 years, wait until the infrastructure catches up. But for most people, like myself, that have off-street parking, you can get an overnight tariff to charge your car. It makes absolute sense.
Economical.
I pay £3 to charge the vehicle to get 150 miles. I was paying £60 in petrol. So there's definitely cases where electric vehicles work. But again, it's that consumer mentality. Like I now speak to my neighbors at the pub, and they'll be like, "Oh, you're not sure about electric vehicles," But you get one or two people that start to say, I've had a positive experience. They then start to think, oh, actually, I'll consider it. And now the finance companies are starting to support electric vehicles more. We've got 0% offers that we're seeing. They're kind of heavily subsidizing the rates. The price is almost at parity when you look at monthly payments. In some cases, actually cheaper. So things are aligning. It takes a shift. We have to change kind of the whole society. You speak to retailers that sell in the cars. Are they comfortable with the new technology? Are they comfortable with how it works? In many cases, lots of salespeople have never driven an electric vehicle. And their default, if someone walks into the showroom, is, oh, you've got a petrol car. Here's another petrol car. It's easy. You know how that works. And when they get questions about, how does it work on an electric car? How does the charging work? If they're unsure themselves, it's hard to sell it to the consumer. So there's fundamental challenges, but it's making progress. At 25% in February is positive. I think we'll have another positive month in March for EV registrations. So it's going in the right direction.
Right direction, yeah. And I guess one of those things, like where money flows and where lenders, obviously, where car finance companies or motor finance lenders are willing to obviously lend that money against, be it new cars or used cars. In part, that's due to kind of risk assessments and these different kind of financing models. Obviously, there's this, maybe not necessarily in the US, but in the UK and Europe, you've got these, as you say, various kind of salary sacrifice programs. There's other pieces as well, like direct to consumer. I think Volvo tried it. Have you, like, some of these subscription and kind of leasing services?
Yes.
How do you see that kind of progressing into the future?
Yeah, it's been talked about for many years now. It's always been kind of called the next big thing, but has never materialized in the UK. Again, I think leasing has worked. So, for someone that says, right, I just want to pay a monthly payment, I get it. No ownership responsibility. I have to give the car back at the end, have a brand new car. Has worked. Subscription is kind of like a fully inclusive lease. So you get your maintenance, your tires, your insurance, everything included, which, like, conceptually is a great idea. But for consumers, when you see, I can lease this car on a left for £200 a month, or I can get this subscription for £400 a month. Yes, it includes all of that. The monthly payment is higher. And I think consumers see those monthly payments and just think, I prefer to have the £200 a month, and I'll sort my insurance out, and I'll do those additional costs. And I don't know if it's the industry not clarifying what's included and demonstrating the value of what subscription is. Because I think when you break it down, you get your insurance costs and how much that costs per month, and the cost of tires and the cost of service and everything that's included with it. It probably stacks. I don't know if as an industry we do a good enough job to showcase that to consumers. So again, consumers have just gone with leasing, salary sacrifice in many cases, and subscription hasn't really taken off here.
Hasn't really taken off, no. Yeah. I guess coming back to the EVs, but also I wanted to touch on alternative fuel technologies. Obviously, hydrogen is one of those, and there's obviously hydrogen cars. It's a lot less common, and if we have the educational piece that we need to tackle, with OEMs, with the finance company, with the lenders, essentially. How do you see? So obviously, just specifically on the UK, the government-backed EV loans. Do you think that will be? Obviously, that's not gone live yet. I think that's still in discussion kind of phase. Is this something that you see impacting, or have you heard any rumors about this?
So there's a consultation at the moment the government are doing on how to move forward with that ZEV mandate. Industry bodies, everybody could kind of add to the consultation. The cutoff was a few weeks ago. I think one of the ideas was this government-backed low-rate loans. Personally, I don't think that's going to be the one that the government will move forward with. Again, for me personally, I think it's how do we protect the used car market? Because if you can make the used electric vehicle value stable, new car, you can work out how much discount you need to give, and the whole market kind of flows through. I think there's some of the points given were reducing the level of VAT on public charging. There doesn't appear to be a consensus across everybody that contributed to, like, here's the golden bullet that fixes it. I think there's lots of different ideas. So it'll be interesting to see what the government does come out with. I imagine they'll do something to protect the manufacturers that build cars in the UK, because it's a big part of the economy. Lots of cars are built in the UK. So I imagine my view would be that they would support those cars built in the UK, give them extra credits or something towards the target. If there's something like a government-backed loan, it would be great. If you could get a lower rate, that obviously makes it more affordable. We know that 80% 85% of people buy new cars on finance, so that makes sense. But I think fundamentally, if we can fix used cars, education, just support used cars, get people driving EVs, I think that will just help fix the whole cycle.
Yeah, that's interesting. So we can move on to the used car, kind of 7 million, obviously used cars. Used cars are more accessible to the vast majority of consumers. And
Yes.
as I kind of touched on, there's unprecedented kind of price volatility. I remember having a hybrid which I bought back in 2021. It went up in price massively.
Yeah.
And then obviously that stalled, and there's a lot of volatility, as you kind of addressed. And how do
Yes.
you see lenders kind of managing that risks associated with then financing these used vehicles, and especially also EVs, but in general?
Yeah.
Yeah.
It's been tough. So lenders have gone through a lot of pain over the last couple of years. Because like you say, that period of sort of 21, 22, we saw inflation increasing, price of cars increasing significantly. There was a massive constraint on supply. So then the used cars that were available, there was far fewer of them, which then pushed the prices up. So we saw a significant increase in prices. And that kind of realigned itself going into 23, into 24. So particularly leasing companies or lenders that had set contracts where they could have the vehicle back. They took the risk effectively of what that car will be worth in the future. There were points where they were expecting a used electric vehicle to hold 60%, let's say, of its value over 3 years. But actually, with the volume that come to market and the kind of consumer desire for electric vehicles, the prices of those drop significantly. So lots of lenders, when they were coming to sell vehicles, were finding that actually they thought it would be worth, let's say, £20,000, but they were only being able to achieve £15,000 at auction. So we're making significant losses. So they've had to get creative of what they do with that. In many cases, lots of them have tried to extend the contracts out. They go back to the person with the contract and say that actually generally prices of cars have gone up. Interest rates have gone up. If you're going to get a brand new car, your monthly payments are likely to have gone up. So how about you stay in this one you've got for an extra year, keep paying your payments to try and alleviate some of that loss. Some of them are now looking at second cycle leasing. So where traditionally a manufacturer and a lender would sell a brand new car, have it on a finance agreement for a period, 3 years. At the end of that 3 years, they just put it into auction or they dispose of it. A retailer buys it, sells it, that's gone. And then they try to put that consumer back into a brand new car. And it's just constantly, how many brand new cars can you sell? Now there's a kind of a realignment where they say, well, actually, we've got these cars that are 2 or 3 years old. The technology on them still fine, they're in good condition. Instead of just giving them to be sold into the wider world, why don't we release those and just kind of keep them on our books so we don't realize that loss that potentially is there on paper. We can smooth it out. They're doing that with salary sacrifice as well. Again, just a way of making these cars affordable to consumers. They instead of just focusing purely on new cars and trying to just push the new, they're having to focus on used as well to protect some of those values. So that's a shift that's kind of been forced through because of it, which is a positive. It helps consumers and will be better in the long term.
Definitely. I guess the long term. So having talked about that, and let's avoid. I mean, we can talk about all of these trends and obviously what happened in the past 5 years. I think that everyone's kind of covered that at length in various pieces, webinars. I think there's been plenty, from chip shortages to EVs and all of that stuff. I guess just coming to the new car market, as you'd say, you quoted some numbers. Obviously, you're expecting 2025 to be similar to 2024, 1.9 million.
Yes.
Obviously, there's a percentage of EVs, but obviously then I think it was announced yesterday, or there was something that came out yesterday about actually dealers saying that the complete sale of petrol vehicles and hybrid vehicles in 2030, the ban on those should be moved forward to 2035. Is there anything like in terms of used also being more accessible, and how does that overlap also for lenders as well?
Yeah. That's what this consultation, the government consultation, will confirm some of that. It was 2030. It's moved back to 2035, pulled forward again to 2030. There's it was 100% EV. Now it's kind of 80. There's been some movements there. I think government legislation will drive it. Whatever kind of government do, they'll put pressure on manufacturers to move in a certain direction.
Of course.
I think the transition to electric has started, and OEMs have invested billions and billions of pounds with their production line. So they're planning 2-3 years ahead. So it's happening, and we've got more and more of these EVs coming. So I don't think it's going to drastically change. We're on the trajectory, and it's going to keep being electric vehicles. And interestingly, where we are today, we're looking about the future, where we're going to get to in the future. We predict that within the next 4 years, so by 2030, there'll be more electric vehicles in the UK than there are diesel cars. So there's around 7 million or so diesel cars in the whole of the UK. We think there'll be slightly more electric vehicles, and that's just under 4.5 years away. And that's a massive transition from, you think, everybody at one point pretty recently had diesel cars to actually, in just 4 years into the future, we'll see more electric cars on the roads than diesel. So I think we're on that trajectory. It's happening. And again, I think it's that education and realization for people to say, this is happening, it's more coming. And over the next couple of years, we'll start to see some cheaper electric vehicles, more affordable electric vehicles. We'll just make it easier for people to get into the technology.
Yeah, definitely. I guess that's one of we can kind of move on. We could talk about automotive trends and how that relates to lending and risk assessment and everything. I guess it's interesting to kind of dive into car financing specifically and kind of the trends that lenders would see in this space. Obviously, there's the elephant in the room with regard to what's what's happening around the commissions. I don't know, how do we call this? How do we call the commissions FCA commissions probe? How do we name this? How have lenders named it?
A lot of it's been the Supreme Court decision. So the Supreme Court are going to view the case next week. So it starts in April, and what happens within that court case and decision that those judges give will impact the wider FCA review. So the FCA started reviewing discretionary commissions a couple of years ago, and they've said they're going to pause it and review it until this new commissions case has gone through, take it all on board, and then give some findings in the summer. So finance industry is in kind of a holding period at the moment. There's so much uncertainty. Which adds to all that uncertainty with the electric vehicles and how that's all working. The finance companies now have the whole uncertainty around regulation. Like the regulator, the FCA, is like, what guidance do we have as an industry? Like, what should we be doing? Where should we be disclosing commissions? At what part of the journey? How should it be done? There's not been much from the regulator to say, look, guys, this is the new norm. Because most of the industry followed regulation up until October last year. And the court decided that regulation wasn't sufficient. And it's like, well, as an industry, you can only do as much as really the regulator tells you to do. And that's what they've done. So it's now just a kind of a holding period where it's like, right, can you give us some steer and some guidance? And I think that will continue for the rest of this year. I think say the court case starts next week. Hopefully it'll be finished within a couple of weeks, and we'll get some outcomes pretty soon after that. It's then just how that impacts the process and how the FCA take that on board and how they tell firms to implement stuff. So I don't think nothing massive will change this year. I think it'll be kind of next year that we start to see some knock-ons. But I think there's some positives, like the commission disclosure. I think should have been something that was made permanent a year or two ago. The FCA had the opportunity to review it and to kind of mandate that commissions should be shown, but they didn't. I think consumers benefit from it. I think transparency always helps. Anything you can make more transparent will help. There's not been a pushback. When I speak to lenders, it's like, what's the pushback from consumers? You're showing them the commissions you're earning. And you see in many cases where consumers are saying, I'm not prepared to continue if you're earning £500 finance commission. It's just, it's very, very rare. So I don't think it's actually impacted the process. We've seen it in mortgages. Mortgages have disclosed commission for years, and I think in many ways it builds trust. If people understand that motor retailers have to make a profit, they have to make money for a service. I think people get it. I think they just don't want to feel like they're having stuff hidden from them or being lied to. So transparency just helps. It's just, I think for an industry, they just need some certainty because there's just so many unknowns at the moment. I think if you speak to anyone within a bank, they're just like, we just want to know whether it's this, left or right. That's fine. We can deal with it once we know, but at the moment it's uncertain. Which
it's a bit up in the air. I was at FTT Lending last week, which is more of a broader kind of lending conference in London. And I remember someone mentioning obviously the FCA just kind of reprimanded lenders for not doing enough with AI and kind of personalizing,
Yeah.
making sure that everything seamless customer experiences, which is in line with regulation, kind of the Consumer Duty Act that we've seen.
Yeah.
But then someone mentioned, basically they said, look, we want to experiment and we want to do these things, but obviously if we do something and then later on the FCA goes, actually you can't do that.
Yeah.
Like the certainty is an interesting. I wonder, and this is a bit off script, if you will.
Yeah.
But I wonder if there's obviously what we've seen in the 2010s with fintechs kind of testing things within sandboxes that the FCA provided. Did you hear anything within term, when it comes to motor finance providers, whether there's kind of a willingness from the FCA's point of view of saying, actually, let's test this stuff, especially when it comes to EVs and government-backed loans and all of these things? Do you think that's something that could potentially be there?
Yeah, definitely. I think it's a great idea. There was an FCA innovation hub that was kind of designed to support the industry with some of this thinking, but I think the FCA could do more. And I don't want to blame the FCA, and I think as a regulator, there's definitely more they can do. It's exactly to that point, to just say, let's help you try and get creative. Let's help you do this. AI is, as you're right, absolutely could be fundamental. And we're seeing some of the new entrants to market, some of the new brokers that are really utilizing technology and having really efficient processes and systems, and it adds value to the consumer and values to the business. But you're right, we just need that regulatory certainty of like, this is kind of the parameters you can work within, and don't go beyond it, which we're lacking at the moment.
We're FCA regulated as well. We've got some interesting stuff on the obviously the commissions and everything that's going on. Obviously, it's a developing situation, so we don't claim to know it all, but it's one of those things that we try to keep in the loop with, and keep everyone in the loop as well. I think that's an interesting kind of segue into digitalization and digital transformation. Obviously, that's a thing within the broader kind of financial services industry, but equally so in motor finance. So coming back to that point with new entrants as well, that's an interesting, like, how is technology transforming that car financing experience, and how have you seen that? Obviously, Auto Trader itself is obviously active in that space and working with lenders and when people are buying cars on the platform. But online applications to approvals and digital contracting and payments processing, all of that stuff.
Yes. I think we've been through a journey of kind of a few years ago trying to do everything digital only. You look at the Kazoo, where it's all about digital, do everything from home. I don't think the country is in that place yet where it's ready for 100% digital. So kind of omni-channel is the buzzword that's used, where you can enable consumers to do some of the jobs they want to do online, but then give them the opportunity to go in person and speak to people. And that's what we've done also. We tried to kind of merge the two. We give consumers the opportunity to do bits of the journey online digitally, but then speak to the retailer to do the bits in person. And I think the lenders are also embracing technology, making eligibility very clear to consumers and giving them upfront eligibility. So you're likely to be approved for this, even through to, soft search, like you do in the mortgage world, where you get a decision in principle and you say, look, based on your current requirements, this is where we would accept, without leaving a credit mark on a consumer's profile. It is massively beneficial. It makes it much quicker and easier. There's still some lenders that go through and do a full credit decision review, and it takes a while and it leaves a mark on a profile, and then they might decline it. It's just that could be improved to give better outcomes to consumers, and technology definitely does that. You look at open banking and all the stuff that just helps. So it's moving in the direction. Just probably needs a bit of a push to be a little bit quicker.
How do you see lenders like currently in that space? Obviously, with, again, coming back to the regulatory point, like the Consumer Duty Act, and that obviously covers affordability and accessibility, all of these things. The flexibility that lenders can provide. Do you see more flexible kind of lending models developing within the market due to the digitalization, or is that still kind of?
To be fair, the kind of the traditional products, when you look at the actual products, PCP, HP, they've not massively changed over decades. There is flexibility within them, but as an industry, we've not massively changed or adapted over the past few decades. PCP's obviously become more prominent. It gives you some options of what to do, but I think there's an opportunity to do something different. It's just no one seems to know what. Subscription was talked about, but it's never really worked.
Exactly, we talked about it.
So it's trying to make a product that's profitable. It gives good consumer outcomes. It doesn't give additional risk to a lender. There's nothing that's clearly kind of in market that's going to be the next big thing.
No, definitely. Yeah, we talked about direct to consumer and obviously subscription models and salary sacrifice, all of these things. And I guess this whole consultation period around government-backed TV loans might come up with some interesting new products.
Yes.
But
Yeah.
again, it's one of those, obviously from a digitalization point of view, it does help. Even with the existing products, you can ensure more seamless kind of. You can ensure that you're obviously compliant, but also you can ensure more seamless kind of customer-centric experience. Again, with that transparent thing in mind, like as you say, within drawing the comparison to mortgages as you did.
Yes.
When you work with brokers now, and if you're buying a house, you can see it on the document, like the information document, obviously how much does the broker get paid, how much does the lender pay the broker, all of that stuff. And I guess with digitalization that could help. Cool. I think we're right bang on time in terms of having discussed quite some of the elephants in the room within motor finance. I think we've covered it all, and obviously these sessions are meant to be slightly shorter, and I'm sure that you're open to connecting with people on LinkedIn and talking about stuff, and equally so I'm always open to people connecting with me or following us on at Lenvi, but equally so on AutoTrader. Obviously, a bit of a shout out in terms of like the key takeaways. I think we talked about some of the bits that everyone's kind of, it's top of mind. There's a lot of things. I think more discussions are obviously needed. It's nice to have these kind of discussions and what's the impact on lenders? How do we work together? And the collaborative piece, I think, came out today. Some of the numbers obviously still stalling, but in 2025, I guess maybe a final kind of closing questions. Are you, when it comes to both new car sales, but also used car and kind of moving towards EV, you sounded optimistic throughout the call. Is this like, do you see in 2025 and beyond, do you see it kind of moving the right way and growth in the market as well?
Yeah, absolutely. The fundamental market, used car particularly, there's been a big correction, but used cars strong and robust, and we think that will keep growing. And we think new car will continue to grow as well. Not maybe not back to the 2.5 million we were seeing pre-COVID, but we think above 2 million, 2.1 over the coming years. There's so much potential coming into the market with new entrants and new models and stuff. Technology is changing. We think there's definitely opportunities for it to continue to grow. Yeah.
Cool. I always like to stop the recording on a positive note. So thank you so much for joining us, Nick, today, and thank you for having that, giving us that data. Go follow obviously Lenvi and AutoTrader, but equally feel free to connect with us personally. And we look forward to hosting the next guest in Fintech with Fries. Thank you so much, Nick, and have a lovely day.
Thank you.
Take care.
Yes.